November 28th, 2023. We had a couple one measured move today I thought was important. Was from the open of bar 13, there we go, to the high of bar 15, or the close of bar 15, I guess, and then a leg two. So it was a one pullback two measured move up today, and that ended up being essentially the top of the trading range. I thought there was a chance that this went all day, and the reason was we had two open body gaps, but my problem with it was we were so early in the day, and it was such a parabolic move that I was kind of wondering. We did end up getting essentially a third of a gap too, but it was such an early move, and I was kind of wondering, with how parabolic this was, I wasn't as sure it was going to go all day, but I was thinking that it possibly could. And I know these body gaps are hard to see, and something you can do. What these body gaps really mean is that there's a gap on a line chart, and so if you're not sure if there's open gaps, you can just look at a line chart and you can see there was an open gap here and an open gap here, and then we got the big, obviously the big open gap here, and the all of those gaps ended up filling in. And you can see that's essentially what the low of this was testing. It was testing that gap that stayed open. And you could argue it's still an open gap until we get a close, like a body close that closes it. But I think that's a lot of what this was testing down here with the big move down, big surprise on 43. And I think the context today was really important too. If you look at essentially the past 5 days, we've been in this trading range, and we still started out today trying to break out to the downside of the trading range. And once the downside breakout failed, it was reasonable to think that bulls were going to try to break out to the upside. And, we didn't end up getting there, but, that was essentially what I thought was going on here. Was after the downside breakout fails, I thought the bulls were going to give it a go and see if they could get to the upside of the trading range, maybe somewhere up here. We did end up getting, however, to the low of this. Limit order bulls who bought below here were disappointed, and they were never let out, any time until today when they were finally let out. And that's exactly where the high, or pretty much exactly where the high of the day was. So that's important. Bar one. A bear bar, not quite closing on its low. And again, it's trying to break below a lot of resistance or below a lot of support. So I think it's better to wait and see if you get follow through. And the follow through on two really isn't all that great. You have a doji bar. If you're a bear selling below one, you want a big follow through bar. You want to, see something like, pretend 5 was a little bigger. If that's kind of what you want to see. If you sold below one, you don't get it on two. You get bad follow through, which makes it more likely that this is one pullback two, and that 3 is going to end up being a second leg trap. 3 also doesn't close on its low. It's really just not all that great in general. Bears were disappointed in the close of 3, hoping it was going to close on its low, and it didn't. And you can see a lot of them bought back shorts, and that's what caused the rally on 4 and the micro gap up. This was strong enough for a second leg down, which is what was happening on 5. 5 was the second leg down for 1, 2, and 3. Can't really sell below 5. It's a low one short at the bottom of the trading range, so really not a very good sell. And you get a reversal bar up on 6. It's a small bull bar. Really, I think it's just from a lack of sellers down here because no one wants to take the short. Anyone who did take the short is going to be exiting above 6 immediately. You can't just sit there and let yourself get stopped out. Quite frankly, if you sell below 5, you need to give it about 15 seconds and then just get out if it's not, collapsing. And you can see we never even broke below 3. So we tested the low of the day and found support, and we got essentially a double bottom, 3, 6. Bears bought back shorts above 6, or any bears who were short for any reason. And that causes the rally up on 7, essentially trying to test the open of the day. I thought if 7 closed on its high, it was potentially a swing buy. I thought the bear channel down was relatively tight, but it could just be a second leg trap. And I thought there was a reasonable chance we rallied if 7 closed on its high. But it didn't close on its high, and 7 not closing on its high should be essentially, a warning to you that this is probably going to be a trading range open, and that a lot of the bars are going to be disappointing for stop order traders. Inside bar on bar 8 that wasn't able to close near its low. I was kind of thinking we were going to get an early rally. I did not think it was going to go nearly this far, but I was, my hope essentially was we were going to get a rally around to yesterday's close and then get some sort of reversal down, and that we'd start to essentially get a bear swing, because I think there's a slightly more likely chance that we're going to end up getting a bear swing over the next couple of days than a bull swing, because the daily chart is just generally pretty overbought, and this isn't very strong. If you're a bear, if you're a bull, do you really want to be buying up here with all these dojis? Probably not. You probably want to wait for the market to get closer to the moving average. So that's what a lot of traders are doing. Bar 9, a doji bar. It's 3 pushes down, so it is a wedge and, potentially reasonable buy above 9. But I think I'd rather wait. This seems like a tight trading range open, and I'd just rather wait for more follow through. You get some follow through on 10, but now it's right on the moving average, so it's less likely that you're going to get, more follow through here. I think you're going to end up getting a disappointing bar after 10 because 10 isn't quite right, being right on the moving average. And, in trading range, a lot of things just don't look quite right. 11, disappointing follow through for the bulls. Failed breakout above the 1 high. If you bought above 9, kind of hard to hold here. Some traders will exit below 11, and then you get bad follow through on 12. You can see 12 traded up to the high of 11 or to the high of 10, and that's exactly where a lot of those traders sold out around break even. 13, I think it's just a lack of sellers below 12. I don't think a lot of traders are selling below 12. I think traders are mostly waiting for a clear always in signal. Although it is probably always in long from this reversal up. I don't think this was enough to make it always in short. So it's probably always in long on the close of 10, but it's hard to want to be long. Then you get a big bull surprise on 14, and I think 14 is an interesting bar. I didn't buy it because I just hesitated because of the tail on top, and it went up pretty quickly. But I thought essentially it was trying to become a vacuum test of, I think this is bar 74, but the close of this bar yesterday, the 3:35 bar Eastern Standard Time. I thought it was trying to get it to essentially this close. And I thought that's what 15 was doing. It ended up being really strong, letting all those traders out. But if you look at, 15 is not really a buy the close bar. It's theoretically reasonable to buy the close because consecutive strong bull bars, but I really don't think it's all that good. This looks more like trading range price action with these, big bars that, trap a lot of traders out. And what essentially was happening here was traders were buying at the market as it started to race up, scared that they were going to get trapped out and it was going to get to the close of, this obvious magnet before they were able to get in. And that's exactly what happened, which happens a lot in trading ranges. And then you get, no surprise, bad follow through on 16 because 15 is just a vacuum test. It's not really a buy the close bar. This doesn't, as silly as it sounds, this doesn't really look like a strong bull trend. This looks like trading range price action. You don't get, early and strong bull trends, you don't get big vacuum tests. In strong bull trends, you get, consistent consecutive bars buying. Like, if you looked at the 1 minute chart for bar 15, it's like this. Like, a strong bull trend usually starts with consistent buying. And that's kind of what this did, right? You got consistent buying and then another, channel up essentially. Ideally, these would all be closing on their highs. But you can see that bulls essentially bought the open of every single 1 minute bar. And they never for 4 straight minutes, they never let the market dip below prior bar. There's even gaps here. Bulls were so eager to buy those closes. And that's because a lot of traders, when they see this kind of thing, they'll go on to a lower time frame and they'll just buy the market on the lower time frame trade and use that kind of entry. That's a pretty reasonable thing to do when you see something like this. But anyways, 16 bad follow through, 17 bad follow through. And it's an inside pattern after a buy climax. Sometimes when you get an II after a buy climax, you end up getting a reversal down and it leads to a big move down. And I thought I thought we might get that, but I wanted to wait and see what we got on 18. If 18 had been a bear bar closing near its low, it might have been a second leg trap, 1 pullback 2. But I also thought it was pretty reasonable to look to sell for a breakout below the 18 bar range and potentially some kind of measure move down. However, bar 18 ended up being a bull bar closing on its high. And I thought bar 18 was a pretty interesting bar because this, 14 and 15 is strong enough for a second leg up. And I was looking at this as the spike and the pullback, and I thought we might get some sort of bull channel. And I was kind of interested to see what we got. Additionally, there's a 90% chance that we're going to break out of the 18 bar range on the day. And it's obviously a lot more likely we're going to get to the upside. So I figured we would at least get up here. But I thought that 18 was an okay swing buy. I was just, concerned that, if you're going to buy above 18, you can't be exiting below 20. If you're going to take this kind of buy, you need to be holding it as literally for always in as you can. And you probably get out below 29. You can see the bulls bought above the high of this bar. So the price that, they need 10.5 points in order to make 10 points because 1 tick above, if you're buying above, you're buying 1 tick above and it needs to go 1 tick past your entry price in order for you to get in or get out. So if you're buying above here, you needed the market to get to 45.76.25. and it got past that. So those bulls who bought above here were able to make 10 points. And I thought that was really important. But additionally, you know, if you're buying above 18, you kind of have to be expecting bad follow through, and you have to not exit when you get what's probably going to end up being a really minor reversal. So you get follow through on 19, but it's a small doji bar. And that's kind of what I was expecting when I took the buy. I did take the buy. And then we got bad follow through on 20. And I was looking at 20, and I don't think always in bulls have to exit. I think it's still more likely we're going up here. I don't think this is a very good low two short. I think if we're going to go down, you're going to get a much stronger bar. So, I kind of took the buy expecting something like this to happen, and, knowing I was going to have to sit through it, and I did. You got good follow through, or just kind of a good bar in general on 21, because if you're still below 20, you're really disappointed at 21. Some follow through on 22, and then 23 runs the stops here and here. And you can see we ended up with another open gap right here. 24, bad follow through for the bulls. And then a big bull surprise on 25, but it's one pullback. So it's one pullback, two pullback, three. So this is essentially a parabolic wedge. It was also a relatively parabolic just channel in general. I bought above 18 hoping for a bull channel. And I was getting a bull channel. You can see we were getting this, draw this channel. But then we got, a massive breakout above it on 25 and a potential parabolic top. So I thought it was okay, to get out pretty quickly here. And I kind of made a mistake. So first off, we got bad follow through on 26, and then you got a bull close on 27. I thought it was okay to probably just put a stop. This seems kind of like a skunk stop, but at this point, there's too much risk that we're going to touch the 24 high. So I think a lot of traders are looking to exit. And I actually got out during 28 as it was going down. It ended up, I would have gotten out below 29 anyways, but I think it makes way more sense to either have a stop below here and look to buy again above a bull bar, or, I'm not sure a stop below here is all that great. Maybe like, something more like two points below 27 would make more sense. And just definitely bulls get out below 29. If you're a bear, do you sell below 29? Maybe. I think it's pretty hard to do though, because, this is a really steep channel, and I've been actively trying not to trade against tight channels. So I don't think, selling below 29 is really all that great. You get bad follow through on 30, and it's just kind of difficult. You're not gonna get out above 30 probably, because you know that you're gonna end up getting bad follow through. But it never ends up triggering 31. I think it's good bar down on 32, bad follow through 33, big bear bar 34, and so it's potentially one pullback, two pullback, three. So it's kind of a parabolic wedge, or sorry, not a parabolic wedge. It's just a wedge in general, but it's also a noticeably tight channel, right? This channel was tighter than you would expect for a correction to be off of, this kind of a move. You're expecting one of two things, right? You're expecting either this to get a second leg up, because if you look on, like, let's say the 15-minute, it's a really tight bull channel up. So you're expecting this to in general get a second leg up, or you're expecting that we're going to go sideways for 40 or 50 bars. We might go down a little bit first, a couple legs down to the moving average, but ultimately we're probably going to bounce around and go sideways and then eventually get a reversal down, or we'll get some sort of one pullback two sort of day. This is kind of unusual, but if you know, it's essentially an endless pullback. But if you noticed, the channel was a lot tighter than you probably would have expected it to be. And I thought we might get back to the bottom of the channel, right? So I thought that 18 essentially was the start of the channel, because this is your spike, this is your pullback, and now you're in the channel phase. So I wasn't too surprised when we got here, though I noted that the pullback was deep enough that I thought the odds that we go far above this high are very low. We additionally did not break out of the 36 bar range today. We broke out of the 18 bar range, but not the 36 bar range. But I was, I kind of thought that in general, we were going to go sideways here and then potentially get another leg up. And, I don't know when it was clearly always in short. I think 34, it might have been always in short on the close of 32. It was probably definitely always in short on the close of 34. But none of these sells are triggering, 36 triggers. So maybe you can sell below 36. Kind of tough to stay short on 41. I think 41 is a minor reversal, but you probably have, a 50, 60%, maybe a 60% chance of two legs sideways to up. I think definitely by 46, you have at least a 60% chance of two legs sideways to up. But anyways, for 41, What was it that far? So big follow through on 37 for the Bears, but disappointing close. We're at the bottom of the bull channel now. 38, kind of bad follow through if you're selling. But there's a big tail here. Trading range likely. 39 essentially triggers the low one below 38 and follow through on 40, but not that big. Disappointing bar on 41. And a lot of times, if you take a sell like 40, you're going to get disappointing follow through like 41, and then it'll trap you out right before it goes in your direction. And that's exactly what happens. 42 traps out a lot of the bears, forces them to sell again a lot lower. And bears are getting back in, and that's kind of part of what's causing the big sell-off on 43. And it's breaking below, the tight channel. So it was unlikely that we were going to get, a lot more down, I think. And then you get bad follow through on 44, a second leg down from this move on 45, and then a reversal up on 46. Like I said, I think by 46, 60% chance at least of two legs sideways to up. I'm not as confident saying that 41 was 60% chance of two legs sideways to up, though I did, in the moment I thought so. So I try to trust my instincts because they're pretty good at this point. But I thought that, definitely by 46, 60% chance of two legs sideways to up. But this was so big that it probably needed its own second leg. And you could argue that, the breakout was kind of the second leg, but I thought that this whole move still needed a second leg. So I was thinking that, we might go sideways for a little while. There's a pretty reasonable chance of a swing up later in the day. And we ended up kind of just getting a bull channel. I don't think it was, all great of a bull channel. We didn't end up getting any strong swings. Obviously, it was a pretty broad and pretty flat bull channel, more of a trending trading range because both sides were making money. Bad follow through on 47, which is kind of expected. And again, a lot of times you're going to get this kind of trade, and then you're going to get a bar that's going to trap out some traders who might exit below 47, but that's a mistake. And then you get an outside up bar on 48. Doji on 49, 50, and 51. So spike, channel, trading range, and then reversal down. 50, 49, 50, and 51 are kind of your hint that we're probably going to get a pullback. When you're getting dojis as follow through, that's really not ideal, and you're kind of right on the moving average. We're probably going to reach the top of the sell climax. You can see we did later. But yeah, these are not all that strong, and we get essentially a failed breakout to the upside, bad follow through, and then a breakout to the downside on 54. Inside bar on 55, outside bar on 56, bad follow through 57, 58. I think this was an expanding triangle and essentially a final flag for the bears, right? Because this whole thing, you get a trend line break, and then essentially a higher low and an attempt at a major trend reversal. I thought that's what was going on at least. But with all these doji bars, I thought 61 was probably a reasonable swing buy. There was a lot of doji bars here, so it made me hesitant to want to buy above 61. But I think if you're buying above 61, you're buying the bottom of the tight trading range, not the top or the middle. So it's probably okay to buy above 61 for a swing trade, thinking that trend line break, higher low, major trend reversal, potential swing up is underway. You get follow through on 62. It's not quite able to close on its high, but it's pretty solid follow through if you bought above 61. I'd be pretty happy in general with 62. I just want to see something. Okay, so did the bulls who bought above here make 5 points? So it needed to get to 63.75. 63.75. So look at that. The bulls who bought above 61 ended up scalping out with exactly 5 points. Why? Because the follow through was good, but it was to the top of the sell climax. And, I'll get there in a second. But, that's interesting that bulls scalped out with 5 points. But you got follow through on 61 or on 62, and then a doji bar on 63, which is disappointing, right? This, is this the start of a strong bull trend? It might not be. And then more disappointment on 64, kind of not a great bar. And then a big bull bar on 65. I did actually buy above 65. I think it might have been a mistake in hindsight, because you're buying right at the top of a sell climax, at the top of a potential tight trading range, or top of a potential trading range in general. But my logic was, if I had bought above 61, I thought it was pretty clearly always in long. And I thought if I had bought above 61, I'd still be long. So I bought above 65, trying to kind of trade the always in position there. And thinking that, in general, that this was strong enough that we were probably going to get a second leg up. And I thought this might be the start of the second leg up, and we might have some magnets up here that we might try to test. There was still like 20 bars left in the day. Or 15 bars left in the day. So I thought it was okay to buy above 65, but it is a potential second leg trap. It's the top of a channel, and it's the top of a sell climax. So for all those reasons, that's why bulls scalped that with 5 points. And I think I was stubborn. I ended up only getting out a lot lower than I should have. I got out below 68, but I probably should have got out below 66 because 66 is bad follow through. And your premise is kind of invalid if it goes below 66. Sometimes you'll get a bar like 66 and then it'll just race up without going below 66, but it rarely goes below 66 and then you get a good bull bar. So bad follow through 67. Once you get 67, a pair of bear bars after this, you're probably not going any higher. And then you get a bear bar, 68. Maybe you can sell 68, but this doesn't seem strong enough for me to want to sell. Doji bar on 69, inside bar on 70. You can see it's a micro channel. We tried to get a big breakout below the micro channel on 71, but it failed at the bottom of the channel. You can see we're getting slightly higher lows, only by a tick on this, but it's still a higher low. So still a bull channel. You get a double bottom and reversal up on 75. None of this was ideal trading. I think 61 was the last viable swing of the day. In general, for always in, maybe you can buy above 9. I don't think that's a great trade though. I think 14 is fine. I thought 18 was good. Kind of tough to want to sell below 29. You're basically selling because always in bulls are exiting, but sometimes that's a reasonable thing to do. You could probably buy above 46, but but it's more of a scalp than anything, I think. I thought you can buy above 61. You could probably have sold below 36 too. Sorry, my voice has been very, very dry. Maybe you can sell the close of 37. Not totally sure. I didn't get in on any of this. I missed this whole thing. So, I'm probably not the best person to ask about how to get in on this, but I thought maybe you could sell this close or below it. But I thought in general that this was more likely to turn into a trading range. And, the tightness of the channel, I think, is what made it possible for this to go so long. But I think, that's your hint, is how tight this channel was. That's your hint to get short. But was there anything else? Yeah, potential buy above 61. I don't think you need to sell anything out here. On the daily chart, and like I mentioned, we got a failed breakout below this trading range. We tried to get above it, and we didn't. So I think that tomorrow, just pay a lot of attention to those same price points. I'd say thinking the same thing today that I was yesterday. We're probably going to get a swing down within the next couple of days because I think because of the daily chart, it's slightly more likely we're going to go down than up. We're getting close to the end of the month. So if you look at the monthly chart, bulls want the bar to close on its high, and they're trying to test this magnet. Bears want as bad a close as possible. This obviously does a lot of damage to their case, and I don't think we're going to, this is good enough that we're probably not going to go a lot higher, but I think I mentioned that yesterday. And yeah, that's the day.